Subscribe to LearnCab and hit the bell icon to get notified.
Now that we have seen section 47, let's have a look at section 128 and then let us decide, is there any reduction which is possible in the late fees which we have just seen under section 47. Let's have a look at section 128. The government may by notification waive in part or in full any penalty in 122, 123, 125, currently not bothered about it, or any late fees referred to in section 47 for such class of taxpayers and under such mitigating circumstances as may be specified therein on the recommendations of council. So friends, what we understand is the government has got powers under section 128 that it can issue the notifications and bring down the late fee which is being imposed under section 47. Now friends, let's have a look. What are those notifications under which are being issued under section 128 and under which late fees has been reduced? We need not remember the notification number. So therefore, we are just saying that these are the notifications which are issued under section 128. So the first one is reduced late fee for GSTR 1 and GSTR 3B. The details of outward supplies which is given under section 37 and 3B is a return which is filed under section 39. So friends, here max late fee has been specified. That means the capping is being done. If it is a nil return means where the tax payable either through credit ledger or through cash ledger is nil. So wherever the tax payable is nil, the maximum late fee which can be demanded is capped at rupees 250 per return. And friends, please understand, this 250 is under CGST. Parallelly, you would be having the same 250 under SGST. If it is not a nil return, then you need to find out according to the class of the SSC. If the aggregate turnover in the preceding financial year was up to 1.5 crores, then the max late fee which can be collected, this is the maximum late fee which can be collected, is rupees 1000 per return. Of course, under CGST, parallelly would be having the same amount under SGST. If the turnover is more than 1.5 crore but up to 5 crores, then the capping is being done at rupees 2500 per return for CGST. If the turnover is more than 5 crores, there is no reduction which is given under section 128. Whatever is the normal late fee which is there under section 47, it would continue. And if you remember, over there, the capping was at rupees 5000 per return. Of course, under CGST, parallel you would be having the same amount under SGST. So friends, this is the capping which is being done by the notifications which is being issued under section 128. Friends, please understand, they are not reducing the late fees. They are saying they're not reducing the late fees which is calculated on a daily basis. They're saying whatever is the late fees which is under section 47, the maximum late fees will not be exceeding these amounts which are specified in the notification. Let's take few examples to understand it better. Let's say aggregate turnover of this particular registered person in the preceding financial year was 1 crore rupees. He files the return with a delay of 40 days. Assuming if it is a nil return, what would be the late fee which is payable? If it is not a nil return, what would be the late fee which is payable? First, let's write down what is the actual late fees which is coming according to section 47. Then we would be writing down the late fees which is there under section 128, and then let's give the final answer so that we are able to understand and appreciate the provisions in a better manner. So friends, if you could recollect section 47, the late fee was rupees 100 per day subject to a maximum of rupees 5000. And friends, please understand, all the examples which we are discussing and which we are going to discuss, we are only going to write according to CGST law. Whatever answer you are getting, the same answer would be under SGST law, and the total answer would be a summation of CGST plus SGST. So here we go. Under section 47, you did not have any bifurcation of nil return or other than nil return. It was very simple, rupees 100 per day subject to a maximum of rupees 5000. So friends, there again, there was no bifurcation of nil return and other than nil return. Also, there was no bifurcation between the turnover of the SSC. It was a flat fee, rupees 100 per day subject to a maximum of rupees 5000. So let's write down according to section 47. If the delay was for 40 days, it is 4000 or 5000, whichever is lower. So I have 4000. Section 47, capped the limit of late fee at rupees 5,000. Whether it is nil return or other than nil return, it is still 4,000. In case of 60 days, it is 6,000 but subject to a maximum of 5,000. So therefore, it is going to be 5,000. Irrespective of the turnover, irrespective of whether it is a nil return or other than nil return. Going further, if it is 2 days, it is of course 200 subject to a maximum of 5,000. So these are the late fees which is being imposed under section 47. Now this, when we are going to read it along with the notification which is issued under section 128, let's check what is the answer which we are getting. Friends, in case of nil return, whether it is being filed by a person irrespective of the turnover, the maximum amount of late fee which can be imposed is rupees 250 per return. So here in case of nil return, it is 4,000 versus 250, 5,000 versus 250, 200 versus 250. So naturally here, first case the answer is going to be 250, second case the answer is going to be 250, third case the answer is going to be 200 rupees. Third case, the answer is going to be 200 rupees because naturally that is lower than 250 rupees. Similarly, for other than nil return. Now friends, for other than nil return, here we go. The turnover is 1 crore. When the turnover is 1 crore up to 1.5 crores, my capping is at rupees 1,000. So 4,000 versus 1,000, my answer is going to be 1,000. My turnover is 4 crores, so I am fitting into this slab 1.5 to 5 crores. My capping is at 2,500. So my answer is going to be 2,500 rupees. The third case, when my turnover is 7 crore. When a turnover is 7 crore, there is no reduction which is there under section 128. By default, you fit into section 47. Section 47 says rupees 200. So therefore here I don't have an other answer because section 128 gives no reduction for that person whose turnover is beyond 5 crore rupees. So whatever is the answer under section 47, the same answer continues. My answer becomes 200. So these are all the answers under CGST. Similarly, you will get another same answer under SGST, and CGST plus SGST would give you the total answer. So this is the reduced late fees under GSTR 1 and 3B by notification which is issued under section 128. Next, reduced late fee for GSTR 4. If it is a nil return, capping is being done. So this is the maximum late fees which can be imposed under section 47. This is being told by a notification which is being issued under section 128. Maximum late fees could be 250 per return, and in case of other than nil return, it could be rupees 1,000 per return. Friends, you need not remember this anything separately. It is as good as the previous table. Friends, in the previous table, it says up to 1.5 crores. The maximum late fees was rupees 1,000, and naturally, for composition taxable person, his turnover cannot exceed 1.5 crore. The same thing of rupees 1,000 per return has been kept over here as well. So same thing you have as it was there in the previous table. You need not remember anything separately for GSTR 4. It is 250 per return and 1,000 per return. Let's take examples. Turnover is 1 crore, delay is 40 days. Let's see, according to section 47 for GSTR 4, the late fee was rupees 100 per day subject to a maximum of rupees 5,000. Irrespective of whether it is a nil return or other than nil return, irrespective of the turnover. So now friends, in this case, rupees 1 crore, 40 days is the delay. So friends, when 40 days is the delay, it is going to be rupees 4,000 or rupees 5,000. We are now discussing according to section 47. So it is going to be rupees 4,000. When the delay is of 2 days, it is going to be rupees 200. The turnover is 1 crore. Aggregate turnover of the preceding financial year, it says it is 7 crores and delay is 2 days. Now friends, here it is not applicable because at the first instance, a person whose aggregate turnover in the preceding financial year was 7 crore, he would not be in a position to opt for the composition scheme in the current financial year. So we mention it as not applicable. Now friends, under section 47, whether it is a nil return or other than nil return, my late fee remains same. Now I come to section 128 and I see what is the maximum amount of late fee which can be imposed. For nil return, it is 250 per return. So I have 4,000 versus 250, 250, 200 versus 250. I get the answer as 200 rupees. So these are the late fees wherein I read section 47 read along with notification which is issued under section 128 for the purpose of a composition taxable person. Next one, if it is other than a nil return. If it is other than a nil return, if my turnover is up to 1.5 crores, because naturally in this case composition taxable person is going to be up to 1.5 crore, it was 1000 per return. So it is 4000 or 1000, 2000 or 1000, I get 1000 as the answer. In the third case, it is not applicable because I am not in a position to opt for composition scheme. I am sure you are able to follow this. Whatever answers we have got, it is under CGST, the same answer is under SGST, and you add these both, you would be getting the total answer. Next one, reduced late fee for GSTR 7. Now friends, if you look into the reduced late fee for GSTR 1, GSTR 3B and GSTR 4, it gave you maximum capping. It gave you maximum capping. It did not touch upon the late fee which is imposed per day. So therefore what you did was you read it along with section 47 late fee, because there it said you rupees 100 per day subject to a maximum of 5000. Under section 128, rupees 100 per day it did not touch upon. That subject to a maximum of 5000, it gave a capping. It gave a capping wherein it told it could be 1000, it could be 2500. Now friends, but if you look into GSTR 7, it is reducing both these aspects. It says 25 per day subject to a maximum of 1000 per return. 25 per day subject to a maximum of 1000 per return. Now friends, in such a scenario, there is no requirement for us to write down the late fees under section 47, because in section 47 it is 100 per day subject to a maximum of 5000. Here it is 25 per day subject to a maximum of 1000 per return. In any case, the late fees of section 128 would only be on a lower side. Friends, the point which I am trying to differentiate is 1, 3B and 4. You wrote down 47, you wrote down 128, then you compared the lower, because there under 47 it was 100 per day subject to maximum of 5000. Under 128 they did not touch upon 100 per day, that kept on continuing. They only touched upon the maximum limit, that they lowered it down. So there was a possibility that rupees 100 per day can come on a lower side, which we have seen in our examples. In few of the cases it had come. But friends, the reduced late fees for GSTR 7, the reduced late fee for GSTR 7, it is 25 per day subject to a maximum of rupees 1000 per return. So friends, here they are touching upon the late fee per day also and the maximum capping also. So therefore there is no requirement for me to see under section 47, because that will always be on a higher side, because there it is rupees 100 per day subject to maximum 5000. Here it is 25 per day subject to maximum of 1000. So therefore friends, and also I am not bothered about aggregate turnover of the preceding financial year, because here there is no such condition. It simply tells you 25 per day subject to a maximum of 1000. So friends, here it is going to 250 rupees, 2500 when the delay is for 100 day, but this is subject to maximum of rupees 1000 per return. 10 days it is going to be 250, 25 per day into 10. Irrespective of turnover, the answer remains the same. 100 days, irrespective of the turnover, it is going to be 1000 rupees. It would have been 2500, 25 per day, but again it is subject to maximum of 1000. So these are the reduced late fees which are there under section 128. Now friends, let's have a relook again at under section 47. What was the late fee which was prescribed? The late fee which was prescribed for outward supplies under section 37, returns under section 39. Who are the persons who are filing returns under section 39? You have a regular taxable person, composition taxable person, NRTP, that is non-resident taxable person, OIDR, ISD, TDS returns. Then you have a final return under section 45. For these persons, the late fee was rupees 1000 per day, during which such failure continues, subject to a maximum of rupees 5000. For annual return under section 45, you had a late fee at lower of the following: 100 per day, during which such failure continues, or 0.25% of the turnover inside the state or union territory. Now friends, let's revisit at the reduced late fees which was there under section 128. It was for GSTR 1, GSTR 3B, GSTR 4 and GSTR 7. So friends, the point which I am trying to highlight is section 47 listed out late fees for various returns. Section 128, out of those returns, it is reducing the late fees only for a selected returns and not for all returns. So therefore, which are those returns which are not impacted by section 128, which means section 128 does not reduce the late fee of those returns. They are return of an NRTP, that is GSTR 5. There is no reduced late fees under section 128. It continues to be at section 47. OIDR 5A, ISD GSTR 6, final return under section 45, and also annual return under section 44. For these returns, NRTP, those which are marked in yellow, OIDR, ISD, final return and annual return, under section 128, there is no such notification which is reducing or which is capping the late fee of these returns. For them, it remains under section 47. For the rest of the returns, GSTR 1, GSTR 3B, GSTR 4 and GSTR 7, in these cases, there is a capping which is available under section 128. And even in this case, friends, as far as GSTR 1, 3B and 4 is concerned, you need to combinedly read 47 and 110-8 to get the correct answer. But however, as far as GSTR 7 is concerned, you just need to apply section 128's capping which is being there, because there it is reducing the per day limit also and also the maximum limit which was specified under section 47. I am sure you are able to follow this. Few amendments in the exemption notification. Friends, services of leasing of assets, rolling stock assets including wagons, coaches and locos by the Indian Railway Finance Corporation to the Indian Railways. This exemption has been withdrawn. Friends, around 70% of the assets of Indian Railways are leased by Indian Railway Finance Corporation. And this leasing of assets is a supply of service which is given by Indian Railway Finance Corporation to the Indian Railways. This exemption which was earlier available is now no longer going to be available. The next one, services provided to government administration under any training program for which total expenditure is borne by the government administration. This used to be the entry prior to the amendment. After amendment here, the scope has been widened. The scope of this entry has been widened. Now it says of which 75% or more of the total expenditure is borne by the government administration. So if there is any training program, the services which is provided to government administration under any training program under which 75% or more of the total expenditure. Earlier it was 100% of total expenditure. Now it is 75% or more of the total expenditure. If it is borne by the government administration, that particular service is going to be exempted. Next one. This is a new entry which has been incorporated. Services by way of granting national permit to a goods carriage to operate throughout India or through contiguous state. Friends, if there is any good carriage vehicle which needs to operate pan-India or in contiguous states, it needs to obtain a permit from the government. So, when the government is going to give this permit, it is a supply of service which is being given by the government to this goods carriage vehicle. Now, this supply of service is exempted. Friends, please understand, the permit which is being exempted, the exemption which we are talking about is only to a goods carriage vehicle. And if the permit which is being given, if you are speaking about the permit which is given to a passenger transportation vehicle, then this exemption doesn't cover this. This entry particularly covers the permit which is given to a goods carriage to operate throughout India or through contiguous states. Friends, the next exemption, this exemption which was earlier there up to 30th of September 2021 is now extended to 30th of September 2022. For your examination, if you have already read this, there is not going to be any difference. Whatever the exemption which you have read this is going to still continue and it is going to be there till 30th of September 2022. What is that exemption? Service by way of transportation of goods by an aircraft from customs station of clearance in India to a place outside India. Now friends, let's suppose I am an exporter. I am exporting goods to you as a buyer who is there in foreign country. When I am exporting these goods to you, the buyer who is there in foreign country, this export of goods is a zero rated supply. We are not talking about this transaction of export of goods. For me to deliver these goods to you, I need to engage a transporter. I might send these goods through a vessel or I might send these goods through aircraft. Now friends, when I am sending these goods through an aircraft. So naturally, the service supplier is going to be the aircraft operator who is going to transport these goods from India, that is the custom station clearance of place from India to a place outside India. The services which are supplied by this aircraft operator is exempted. Earlier it was exempted up to 30th of September 2021. Now this is extended to 30th of September 2022. Now friends, this was a case what we discussed about aircraft. Now what if I decide to send these goods through a vessel? Now this vessel operator is going to charge me some service charges for delivering these goods from my location, that is from the customs clearance in India, to a place outside India to my buyer who is located in foreign country. Whether that also is exempted? The answer is yes, that also is exempted, and that is also extended to 30th of September 2022. So services by way of transportation of goods by a vessel from customs station of clearance in India to a place outside India, this exemption entry is extended till 30th of September 2022. The next amendment is with regard to Rule 138E, an amendment in E-Way Bill provisions. Friends, before we discuss this amendment is assessee friendly amendment. Before we discuss this amendment, let us discuss a brief background about the Rule 138E. Friends, the government is giving a lot of importance to GST compliance. The government is of the view that if GST compliance is being controlled, if the system is created, if the mechanism is created in such a manner that all the registered persons are forced, all the registered persons are made to file their returns correctly and within due time and within the due date, a lot of tax evasion can be stopped. So therefore, the government through various tools, through various measures are compelling the assessee, pressurizing the registered persons to file their returns within the time with correct figures. What are the various tools which the government is using to threaten the assessees, to threaten the registered persons to file their returns in a proper manner? Those tools are, if you do not file the returns, within due date, which means if you are filing the returns belatedly, of course you are liable to pay late fees under section 47. Since you are filing the returns belatedly, naturally you would also be paying taxes in a belated manner. So therefore there is interest which is going to be levied for delay in payment of interest, late fees for delay in filing the returns, interest for delay in payment of taxes. Furthermore, if you do not file the returns for consecutive tax periods, then your registration itself is liable to be cancelled. There is a provision for cancellation of registration if you are not filing returns for certain consecutive tax periods. Furthermore, if you do not file the returns, then your recipient is not in a position to take credit. So therefore, there is pressure which is mounted, which is created, which is emerging from your recipient side, that if you do not file the returns GSTR 1, GSTR 3B, your recipient is not in a position to take the credit. So therefore, there is a pressure which is created from your recipient's side. And furthermore, friends, if you do not file the returns, that means if you are a return defaulter, you would not be in a position to generate an E-Way bill. If you are a return defaulter, you would not be in a position to generate an E-Way bill, which means that you will not be able to supply the goods, because if you are going to supply the goods without an E-Way bill where E-Way bill is required, your goods would be intercepted in transit and huge penalties would be imposed on you. So therefore, the government has also created a mechanism, created a tool wherein if you are a return defaulter, which means that if you are not filing returns, then in those cases you would not be in a position to generate an E-Way bill. Now friends, as regards as the last point which we had discussed, that you would not be in a position to generate an E-Way bill, the government has travelled very far. The government has travelled very far, stating that in case if you are a return defaulter, I repeat, in case if you are a return defaulter, you cannot generate an E-Way bill. This is agreeable. As far as I am a return defaulter, I would not be in a position to generate an E-Way bill for the outward supplies which are being made by me. This is agreeable. This is tolerable. But friends, now the provision of 138E stated that if I am a return defaulter, anywhere in Part A of EWB 01, either as a supplier or as a recipient, if my name is there, E-Way bill cannot be generated. I repeat, 138E was such that it travelled to such an extent, stating that if I am a return defaulter, if my name is anywhere available in part A of EWB 01, be it supplier, be it recipient, E-Way bill cannot be generated. Therefore, if I want to purchase goods, I am a return defaulter, you are a supplier, you are initiating outward movement of goods to me, you are not a defaulter, I am a defaulter, I am just purchasing the goods, E-Way bill cannot be generated. Even though you are not a defaulter, you are the supplier, you have to deliver the goods to me, I cannot purchase the goods. This was 138E as it stood prior to amendment. So friends, what happened? The industry represented stating that this provision is too harsh. This provision is too harsh in the manner that if you are restricting the supplier who is a defaulter from generating an E-Way bill for his outward supplies, this is agreeable. But if anywhere in the entire E-Way bill, if this person's name is appearing either as the consignor or as the consignee, and if he happens to be a return defaulter, none of them could generate an E-Way bill if this person's name is appearing in part A of EWB 01. This is too harsh a provision and this needs to be trimmed down. So friends, Rule 138E has been trimmed down and it has come down to the effect that if the return defaulter wants to generate an E-Way bill for outward supply, then E-Way bill cannot be generated. In other circumstances, E-Way bill is permitted. Let's have a look at Rule 138E as it stood prior to amendment, and then let's have a look at Rule 138E as it is standing after amendment. So prior to amendment, notwithstanding anything contained in Sub-Rule 1 of Rule 138 Sub-Rule 1 stated that wherever there is movement of goods exceeding the threshold, the person who is causing movement of goods needs to furnish information in Part A of EWB 01. So notwithstanding what is written over there, no person shall be allowed to furnish the information in Part A of EWB 01 in respect of a registered person, whether as a supplier or as a recipient who is a return defaulter. All these categories A, B, C are categories of return defaulters. What is return defaulters? We need not discuss this because this is not a scope of amendment. So friends, in short, if you have not filed returns GSTR 3B for consecutive tax periods, for 2 consecutive tax periods, if you have not filed GSTR 1, if you have not filed GSTR 4, all these categories are there. They are return defaulters. We are not going into this because there is no change. So friends, in simple, what we are trying to understand is if you are a return defaulter prior to amendment, if your name is anywhere involved in EWB 01, you would not be, no person would be allowed to generate an E-Way bill. Let's take scenarios. Let's suppose consignor is A, consignee is B, defaulter is A. So A is the defaulter. Now A wants to generate an E-Way bill. A wants to generate an E-Way bill, not permissible. Consignor is A, consignee is B, defaulter is again A. B wants to generate an E-Way bill, not possible because the defaulter's name is going to appear in Part A of EWB 01, not possible. Consignor is A, consignee is B, defaulter is B. Consignor is A, consignee is B, defaulter is B. A wants to generate an E-Way bill, not possible. Consignor is A, consignee is B, defaulter is B. B wants to generate an E-Way bill, not possible. Consignor is A, consignee is B, defaulter could either be A or it could be B. E-Way bill, transporter wants to generate an E-Way bill, Part A, transporter wants to fill it. This also is not possible. So friends, the essence is if anywhere in the entire scenario in Part A of EWB 01, if return defaulter is involved, EWB 01 cannot be generated. So now industry represented, the amended rule stands as such. Notwithstanding anything contained in Sub-Rule 1 of Rule 138, no person shall be allowed to furnish the information in Part A of EWB 01 in respect of any outward movement of goods of a registered person who is a return defaulter. So friends, in essence, it is simply telling you if the registered person who is a return defaulter is generating an E-Way bill for outward movement of goods. I repeat, if the E-Way bill which is going to be generated, if the E-Way bill is going to be generated by a return defaulter who is a registered person for outward movement of goods, that cannot be generated. If E-Way bill, if the person who is a return defaulter wants to generate an E-Way bill for his outward movement of goods, it cannot be done. In other permutations and combinations, that is possible. Let's have a look at the scenarios. Let's say the consignor is A, the consignee is B, defaulter is A. That means A is a return defaulter. EWB for outward movement of goods. Let's take this scenario. I am the consignor, you are the consignee, I am the return defaulter. Now, this is a case where I am supposed to deliver the goods to you. Now, when I am supposed to deliver the goods to you, let us assume that according to our understanding, I am supposed to generate an E-Way bill. So, therefore, I log into the E-Way bill portal. I give in my credentials, I give in my user ID and password. Now, when I am going to select the reason, for me the reason is going to be outward movement of goods, because now for me it is a supply which I am making to you. Would I be in a position to generate an E-Way bill? The answer is no. Scenario number 2. Please understand, scenario number 2. Consignor is A, consignee is B, defaulter is A. Again, defaulter is A. Now, can I generate an E-Way bill for outward movement of goods? The answer is no. Next scenario. Can you generate an E-Way bill for inward movement of goods? Friends, please understand, what does 138A restrict? It says no person shall be able to furnish information in part A in respect of any outward movement of goods of a registered person who is a return defaulter. In this case, now friends, I cannot generate an E-Way bill, but I ask you to generate an E-Way bill. You go to your E-Way bill portal, given your login credentials, your user ID and password, you want to generate an E-Way bill. I would be a consignor, you would be a consignee. For you, it is going to be inward movement of goods. Are you barred under 138E to generate an E-Way bill? The answer is no. So therefore, can you generate an E-Way bill? Yes, you can generate an E-Way bill. So now friends, please understand what is the difference between scenario 1 and scenario 2. In scenario 1 and scenario 2, I am the supplier, you are the recipient. This is common. Fine. In scenario 1, when I was supposed to generate an E-Way bill, it was not possible for me because for me it was outward movement of goods. Therefore, it was not possible. In scenario number 2, you are going to generate an E-Way bill. For you, it is inward movement of goods. So therefore, for you, it is possible to generate an E-Way bill. Now friends, you may question, then where is the requirement of 138E? Where is the requirement of 138E wherein all of them would opt for scenario number 2 and therefore 138E itself would be bypassed. Everybody would opt for scenario number 2 and E-Way bill could be generated. So how is the purpose, the objective of 138E being served? Friends, the objective still it is being served. Although not in the manner it was being there, it was not too harsh how it was there prior to amendment, but still now also the objective is being served. Let's talk about the scenario. Let's say I am the supplier, you are the recipient. I need to deliver these goods to you. Fine, I need to deliver these goods to you. So therefore, I am initiating the movement of goods. I am supposed to raise an invoice. I am supposed to generate an E-Way bill and I am supposed to deliver the goods to you. So therefore, naturally, what would you ask me? You would ask me to deliver these goods to you. And the moment the goods are delivered at your site, you are going to make the payment to me. So now friends, since I know that I am a return defaulter and I know that I am not in a position to generate an E-Way bill, I would not be in a position to deliver the goods to you without generating an E-Way bill. I request you that can you please generate an E-Way bill? Now friends, the moment I ask you, can you generate an E-Way bill? What is going to be the natural question which you are going to ask me? You are going to ask me, why not am I generating an E-Way bill? Because I know the delivery time, I know the vehicle number, so why not am I generating an E-Way bill? Why not am I furnishing information in part A for my outward movement of goods? Then I would inform you, because I am a return defaulter under 138E, I am restricted from generating an E-Way bill, from furnishing information in part A of EWB 01. The moment I say this, it would be an alert for you. Why would it be an alert for you? Now you would start thinking that I am a return defaulter. Therefore, 138E is hitting me, which means that I might have not filed my GSTR 1. I might not have filed my GSTR 3B. I might not have paid taxes against the supplies which I have made. So therefore, you would get serious doubts about eligibility of credit for this supply which I am now making to you. You might think that against this supply which I am now making to you, what if I do not file my GSTR 1? This credit would not appear in your GSTR 2B and you would not be in a position to take credit. You would start feeling the risk of the transaction. So therefore, now you would indirectly this particular provision 138E would indirectly create a pressure upon me from my customers. My customers would start questioning me. My goodwill would be hampered. So therefore, what I would first do is whatever is the pending dues, whatever is the pending returns which are there, I would first file them and clear myself off the tag of the return defaulter. So this is an indirect pressure which is going to be mounted from the recipient's side. Even though in scenario number 2, E-Way bill could be generated, please think practically. In all the cases, me as a supplier, if I am supposed to deliver the goods to you, would I be comfortable? Would it be easy enough for me to ask to generate an E-Way bill, to ask my customer to generate an E-Way bill? Because naturally in this case, my goodwill is going to be hampered. So friends, scenario A and scenario B, the difference is in scenario B, E-Way bill could be generated, but of course at the cost of some loss in goodwill. Scenario number 3, consignor is A, consignee is B, defaulter is B. Defaulter is B. For outward movement of goods, so A wants to generate an E-Way bill. For outward movement of goods, is it possible? Yes, because now the person who wants to generate an E-Way bill for outward movement of goods is not a defaulter. Scenario number 4, consignor is A, consignee is B, defaulter is B. Now it is for inward movement of goods. If you have gone through, listen to the wordings carefully of 138E, you would not be facing any confusion. Friends, please understand, I am the supplier, you are the recipient, you are the defaulter. For some reason, I ask you to generate an E-Way bill to furnish information in part A. Would that be possible? Friends, what does 138E tell you? 138E tells you in respect of any outward movement of goods of a return defaulter, part A would not be furnished. Now friends, are you a return defaulter? Yes. Are you attempting to generate an E-Way bill? Yes. But is it for your outward movement of goods? The answer is no. It is for your inward movement of goods. This is not restricted by 138E. Here also it is possible. So friends, all that you need to remember is in respect of outward movement of goods of a return defaulter, information in part A of EWB 01 cannot be furnished. So friends, what is the difference? The difference is in this table, scenario prior to amendment and scenario post amendment. The consignor is A, consignee is B, defaulter is A. In respect of outward E-Way bill, prior to amendment not possible, post amendment also not possible. Consignor is A, consignee is B, defaulter is A. In respect of inward E-Way bill, prior to amendment it was not possible, post amendment possible. Consignor is A, consignee is B, defaulter is B. In respect of outward movement of goods, prior to amendment not possible, post amendment possible. Consignor is A, consignee is B, defaulter is B. This is in case of inward E-Way bill, inward movement of goods, inward E-Way bill, pre-amendment not possible, post-amendment is possible. So friends, here in all these cases, there is relaxation. This amendment is SSC friendly. So friends, we have now come to an end of the shortest amendment series ever since the inception of GST. I hope you have enjoyed it. If you have any queries or if you want to get in touch with me, you can please write to me at the email ID which is mentioned over here. All the very best for your examinations.
Subscribe to LearnCab and hit the bell icon to get notified.